I think these stocks are going to be rewarded. Truth will win out. They're going to be incredibly profitable with time. They're still in the investment stage now. But I think that those who avoid these stocks, that will end badly as well.
In a recent interview with Etro, Cathie Wood discusses Tesla's groundbreaking advancements in AI and Elon Musk's visionary leadership. She emphasizes that Tesla is more than just an electric vehicle manufacturer. It's a key player in AI innovation. Cathie highlights the company's potential to lead in industries such as autonomous driving, robotics, and energy. At the time of this discussion, Bitcoin is trading at $67,000, experiencing a 2% rise in the past 24 hours and a 7% increase over the month. With Elon Musk at the helm, Tesla's ability to harness AI is set to drive remarkable growth across various sectors. Before we dive deeper, don't forget to like, subscribe, and share this channel. Now, let's hear more from Cathie Wood on Tesla's pivotal role in shaping the future of AI-driven industries.
I think Elon understands that these technologies are converging. So he is creating huge businesses. So just to give you the example on Tesla, it's the easy one. I gave you the 5 platforms around which we have centered our investing and our research. Tesla is the convergence of 3 of them. Robotics, autonomous vehicles are robots. And I consider my Model 3 and my Model Y to be early stage robots. So autonomous vehicles are robots. They will be electric and they'll be powered by AI. And we do believe that the autonomous taxi platform opportunity is going to be one of the largest in terms of scaling during the next 5 to 10 years. So we think Tesla will own one of those platforms thanks to Elon's understanding of this convergence. And we think that platform or the platform providers around the world will generate $4 to $5 trillion in revenue from essentially nothing now in the next 5 to 10 years. And it's going to be winner take most. Elon understands that. He understands it in the autonomous vehicle world. He understands it in space. He understands it in large language models in the private sector. So XAI and even X itself, formerly Twitter, is going to be a source of great content for his models, for his large language models, as will the content coming out of Tesla. All of those real world driving miles, that's data that he can push through the large language model. So he'll have more differentiated kinds of data, space, autonomous vehicles, Neuralink, so the genomic or multiomics data, than I think anyone else in the world. So many people think, oh my gosh, he is spreading himself way too thin. Absolutely not. He is masterminding one of the most important strategies, certainly in the AI age, and is going to build, we think, 5 or 6 of the largest and most important companies in the world. So if anyone wants to see how we model and the detailed way in which we model, you can go to our website, arc-invest.com, and find the blog and the model, or you can go to GitHub. We put our model on GitHub. This one we feel is highly misunderstood. Many people value it as an EV manufacturer because they really can't get their arms around autonomous. Why is that? It's the way they've set up their research departments. They've got their auto analysts following Tesla. We don't have an auto analyst following Tesla. We have 3 analysts following Tesla: a robotics, energy storage, and artificial intelligence analyst. And actually a 4th one, Tasha Keeney, pulling it all together in the autonomous model. And so if you look at the model, you'll see that Tesla is moving from an EV model where the gross margins are right now, they range in the 15-16% range for the EV sector. And we think they'll take those margins to the 30% range. But what autonomous is going to do is turn Tesla into a software as a service company. Software as a service companies have 80% plus gross margins. And we think that the inefficiency in the market, while Tesla is not priced purely like an EV manufacturer now, it's more richly priced. It is not priced like a software as a service provider. And you'll see in our model how we transition from EVs now dominating the model to the autonomous platform dominating in 2029. And we think autonomous will account for 90% of its valuation at that time. So looking at it as an EV company only misses where the valuation is going. It's a little bit like an analogy would be in the early days, many people thought Amazon was just a retail provider, and they had no idea. They didn't know what to do with Amazon Web Services. Now the cloud is the most highly valued part of Amazon. It's one of the most important cloud providers. And yet I think there's still a lot of retail analysts following it. It should be technology analysts, certainly those focused on cloud and AI. I will say, um, the interest rate environment in the last few years was very tough for innovation-based strategies. Um, those are coming down now, but what we've seen develop over the last few years is a nice long base in some of our innovation strategies. And in our world, or in the trading world, I should say, the longer the base, the bigger the breakout. And we do think, in fact, if you exclude the boom and bust in innovation strategies during the tech and telecom bubble, you'll see that the goes all the way back now to 2018. That's a very long base. So we're looking forward to a number of good years ahead as rates come down and the markets broaden out.
Absolutely.
A lot of people ask me about that point, Yoni, uh, the controversies around Elon. Um, what we do to understand whether or not he's on the right track is we keep focused on the technologies and how he's driving them. He epitomizes our belief that technologies and understands that technologies are writing down learning curves. He figures out, he does a lot of first principles research. He does not depend on on listening to and learning how things have been done. He's creating new ways of doing things, and using the learning curves and cost declines that learning curves present in technology to drive new ways of doing things. Uh, that is his mindset. So he's all about the future, not about the past. And we just focus on, is he creating moats or barriers to entry with his technologies? And he is. I think, well, in terms of a visionary leader, uh, he's on a mission, and everyone knows the mission. He's creating some of the hardest projects in the world for engineers to evolve, and so he has to surround himself by really smart people,
Mm.
not only engineers but also business people. And sure, that he has a very strong point of view, but I know he respects people. And in fact, he's even said it when we did our podcast with him. uh, right after it, he said, one of the most important things that you can do for Tesla and for me is to tell me when you think I'm going wrong. Now, he said that to us as investors. He said there aren't, you have to have a strong point of view in order to tell Elon he is wrong. And he knows we have a strong point of view. We do our research, and we understand the competitive dynamics as well. So we do have knowledge that he may not have. And, that gives you a sense of the
Mm.
type of person that he is. He does not suffer fools, though. If he does not respect people, they know so and they're out pretty quickly. And it's the most interesting time. And psychologically, behavioral science is going to write books about what's going on. If you look at the period from the early 80s to the tech and telecom bubble, that is when all the seeds for what is happening today were planted. They were planted back then. And everybody, investors went crazy in the late 90s. They just threw money at the seeds. The seeds were nowhere ready to germinate, but they threw money, and that ended badly. Today, what is happening? Uh, Here, the seeds have been germinating for 25, 30 years, and and now they are flourishing. And yet, investors are fearful and they're hugging their benchmarks really closely when it's all happening now. We are ready for prime time.